Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. And the day today so far has been on the downside for the Nifty. We have seen a recovery on the Bank Nifty that lent some support, but still Nifty continues to be down around 80 odd points. Midcaps 67 points lower, doing slightly better than what the benchmarks are doing, but a lot of sectoral movers, especially on the downside today.
A lot of sectoral movers, especially on the downside. A lot of stocks reacting to results, and especially the IT pack. They generally start off the earnings season, and it's been slightly mixed so far, but quite a lot lined up on the show. Let's start off with the top headlines. Key indices trade lower in a range-bound session on Dalal Street. Midcap index also sees near a 100-point cut as declines outnumber advances. Automobiles and metals are the big drags.
Oil marketing companies surge in trade as crude oil prices witnessed 2.5% decline overnight. OPEC cuts world demand estimates for the third month.
Sterling and Wilson Renewable Energy surges in trade on the back of a good Q2 performance. The management says legacy international projects are behind them. Gross margin likely to continue to trend at 10%.
Angel One shares surge over 13% in trade on the back of solid Q2 performance. Company reports improvement in operational performance, and management says they achieved best ever performance in Q2 and they hold on to their guidance of 45 to 50% in terms of EBITDA margins. All right, those are the top headlines. And, we've been getting a lot of earnings. Nugent Software, for instance, just reported numbers. It's a strong growth in margins on a quarter-on-quarter basis. The stock is high by 1.5%. There's been a sharp spike from the lows as well. Net profit is up 48%. And we do have the revenue number coming in as well. And that looks better than what the street was working with. It's a 15% growth. So actually, the profit growth is much higher than what the revenue growth has been. Even margins are higher, much higher than the revenue uptick that we've seen. The EBITDA is up 73%, so we'll watch out for the internals, what really led to this improvement in the operational performance, because while the revenue growth is 15%, the EBITDA growth has come in at 74%. But overall, for the markets, the Nifty is down 80 points right now. We have the Bank Nifty, which is lending some support, as I earlier pointed out. And mid-caps, they are in the red, but small cap index, that is in the green today. So small caps, they continue to do well. So that's a varied movement that we are seeing in the stock market today, because that has continued to see an up move here. The auto names are under pressure today. A lot happening in the auto space. We have numbers coming in tomorrow. There's a new IPO. So we keep tracking that. And the biggest trigger now, of course, is what happens with the festive demand. We have the earnings trickling in. So that will decide the mood of the market as well.
Well, that's right. Auto stocks so far were holding up very strongly ahead of the upcoming IPO. But today, as the IPO has hit the markets, and the subscription over there is quite strong in the first 3 to 4 hours, ever since the IPO opened. But what we've actually seen is there's been quite a bit of a sell-off in the secondary market when it comes to the auto stocks. But this is a special segment, Midcap Movers. Hormaz is standing by the wall to take us to the midcaps that are moving around in the session.
Well, all over the place is the market right now, in one direction or the other. No specific trend that is emerging within the broader markets as well. But the small caps are the ones that are in the action. So we will start off with some names that are on the gaining side within the small cap space. And those will be the ones that are actually in action, with 5-star Business Finance 6.5% higher. Aegis Logistics also a similar quantum. 361 WAM continues to have a good ride in the recent times. So some gainers there in the broader markets. A lot of result reactions. We just saw Nugent Software reporting results, but some of the other result reactions, including the likes of Sterling and Wilson. But Angel One is the standout among all of them. 14% higher now after its results. PVR Inox just came out with the results, has fallen to the lowest point of the day, and Bank of Maharashtra too fluctuating between gains and losses, currently 1.5% higher after its results that it just reported. Some shipbuilders are doing very well in today's trading session. All three of them, Garden Reach and Mazagon Dock, outperforming, when Cochin Shipyard too trading with gains of around 2.5%. Volumes, stocks that are doing well on the back of volumes today. Mastech leading the pack. Motilal Oswal also having a good day. HPCL also because of the crude oil price impact. And Fine Organics seeing gains of anywhere between 5 to 8% on very strong volumes. And lastly, Stocks that are bucking the trend in today's trading session: Oil India, Godrej Properties. It was Godrej Industries actually, Nalco and Minda not having a very good day, down to the lowest point of the day in today's session. Back to you guys.
All right, thank you so much for those names, Sarmaz. Those are some mid-cap movers. By the way, for all marketing companies, yes, of course, the crude oil prices are lower, but the other thing is that the Maharashtra election date will be announced today. There was a fear that there could be price cuts that could come by ahead of elections, but after today, there will be election code of conduct. So yes, they might not be able to go ahead and take these policy decisions, and that's also the reason why these stocks could be on our radar. But we'll move on and talk about some technicals. Sudeep Shah of SBI Securities is joining us on the show now. Sudeep, good afternoon. Tell us the next level to watch out for on the Nifty, and tell us your individual stock picks as well.
Yeah, good afternoon, Sonal. Sonal, what we've seen since morning is that markets have been quite on a weaker footing, in 25,200, 25,250 has acted as a strong resistance even today and in the last few sessions. So on the downside now, the key levels to watch out for would be 24,900, 24,950 zone, where there is strong put writing happening. This is from a positional perspective. Now, if we look at it from an intraday standpoint, 25,000 zone would act as a strong support. So any bounces from an intraday basis, 25,000 zone would have to be looked upon as an important support. But overall, positionally, 24,890 to 24,900 zone will act as a strong support. What we feel is that despite these range-bound moves, there's strong action in the mid-caps and the small caps, and quality mid-caps. If we look at it now, the first one that we have on our radar today is the FSL Phosphorus Limited. Mid-cap IDs have had a decent run in the last few weeks. FSL is now in the last 5-7 days, FSL was consolidating and today has given a good breakout on the upside. Overall, it was in an uptrend. The stock consolidated for a good period of 2.5 months, and today we are witnessing a breakout. So I feel FSL from the current levels could be bought with a stop loss of 325 on the downside and a target of 345 to 350 on the upside. Now, the second stock that I have on my radar is Deepak Nitrate. Now, we've been seeing some rebound in these chemical names in the last few sessions, and even Deepak Nitrate, after a decent move up to 3,100 in July, the stock was consolidating between this 2,780 and 2,900 zone in the last couple of months. Today, we have seen strong action with long build-up happening here, and it is on a cusp of a downward sloping trendline breakout. So I feel this stock can be bought from a positional perspective. The top losses here would be 2,890 on the downside, and the targets would be 3,050 and 3,100 on the upside.
Okay, thank you so much for that, Sudeep. So mid-cap IT and one stock from the chemical pack, Deepak Nitrite, is what you're looking at today. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Let's talk about some stock-specific news now. Time Technoplast is surging in trades. Systematics has initiated coverage on the stock. Sudarshan is joining us with all those details. Sudarshan?
That's correct. So stock is buzzing in trade. It's up almost 5% after Systematics has initiated coverage on the stock with a buy call, and target is to be 615 per share, implying upside of more than 50% from current level. Systematics says it's optimistic on company's value-added composite products, its stable and long-standing industrial packaging business, and companies focus on improving financials to turn debt-free over next 2 to 3 years. Companies amongst top 3 players globally in industrial packaging and composite products, and it holds market share of 50 to 60% in large-size plastic drum globally. Talking about estimates, Systematics says over FY24-27, revenue and EBITDA CAGR is seen growing in the range of 15 to 17%, and profit is seen growing at 27% CAGR over FY24-27. Pre-tax ROCE to expand from 16% FY24 to 23% FY27, and operating cash flow to EBITDA is likely to be of more than 60% over next 3 years as per Systematics.
Thank you so much for that, Sudarshan. The stock holding up quite strong in the session today. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, the other stock in focus today is Ramakrishna Forgings. UBS has come out with a note on this particular name. Sudarshan joins us once again to take us through the key details of that particular note. Sudarshan, over to you.
So UBS has initiated coverage on the stock with a buy call and target is rupees 1500 per share, which implies upside of more than 40% from current levels. It says as per UBS, key growth drivers are first, higher penetration of EV and aluminium forging, second, rising contribution from recent acquisitions and new clients in the earth-moving farm equipment and oil and gas segments. And also there are opportunities that UBS sees in rail segment from Vande Bharat Express and metro trains. It expects revenue CAGR of 22% during FY25-27 compared to consensus that other brokers are building of 17%.
All right, 2.5% higher on Ramakrishna Forgings. Thank you so much, Sudarshan, for joining in with all those details. We'll slip into a short break now. When we come back, we'll talk about the market, stock-specific action on the other side, and some corporate conversations as well. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Quickly taking a look at the markets, continues to be very steady, and we have an 87-point downtick on the Nifty right now. The Bank Nifty is the one which is doing well. That one is up around 42 points. A lot of individual movers. Sensex Realty is one of them. The Q2 update has been better than what the street was working with. It's been a growth on a YY basis for the company in terms of pre-sales and collections, and this has happened at a time when other players have been talking about a YY fall. So if we look at the numbers, it's a 33% improvement in pre-sales and collections are up 25% as well. But this is about Sensex Realty. Let's talk about PVR Inox because that stock is in focus on the back of a mixed set of Q2 earnings. The net profit beat estimates while the net profit and margin missed estimates. To discuss the Q2 numbers and outlook, the MD of the company, Ajay Bijli, and CFO Gaurav Sharma is joining us now. Gentlemen, good afternoon. Thank you so much for joining in today. Mr. Bijli, let me come across to you first up. Q2 saw a sequential recovery on a YY basis. It's a big decline. But if we talk about the trends going forward, Q3 is seeing big releases. What are the trends looking like? What is the outlook in terms of occupancies, in terms of margins and revenue growth as well?
Well, this quarter is getting compared to same period last quarter where we had very big blockbusters. So that's why it's looking muted. But a lot of movies which are supposed to come in Q2 have now shifted to Q3. So it's definitely looking much better in terms of occupancies, ATP and SPH, which is spent per head on food, on average ticket price. You've got Pushpa 2, which is a very big movie. Luckily, Pushpa 2 is not coming towards the end of December. It's coming at the beginning of December, on the 6th of December. Two big films on Diwali are coming. Singham as well as Bhool Bhulaiya. Then we got Venom, we got Gladiator, some other South movies are coming. So there's big Sitare Zameen Par is another film that may come of Aamir Khan. So lots of movies are coming, and I think if you compare sequentially from Q1, Q2 is better and Q3 is looking far better than how Q2 has panned out.
Gentlemen, good afternoon, Mr. Bijli and Gaurav, Prashant here. Thank you very much for being with us. Substantially better, Mr. Bijli, would you want to put some numbers to it? How much better?
Substantially, I mean, it's difficult to predict, but you know, if you just go by the lineup of the movies and the kind of sort of response that we're getting from Singham, especially, and Bhool Bhulaiya is a very strong franchise. Pushpa 2, I mean, it can just surprise us all. I can't I'm not a betting man, so I don't put bets on things, but it's looking like it's going to be probably as big as what Q2 was last year, I would say.
Got it. Gaurav, if you want to give us some of the sort of hygiene details for the quarter that we saw, what was occupancy, what was the average spends that you saw per ticket? What about F&B? And how do each of these matrices compare to the previous quarter?
Q2 was very strong for us. We saw almost 20% increase in revenues compared to the Q1. We did about 38.8 million admissions. That's roughly about 25.5% occupancy at an average ticket price of about 257. So it was a decent quarter. August was the strongest month for us on the back of Screen 2, which has become the highest grossing Hindi film of all time. We did a lot of re-releases during the quarter, which was a big hit with the audience, especially during the lean period. Some of the films like Tumbad, Rockstar, Laila Majnu did extremely well at the box office. In terms of F&B spending, it was about 136 rupees, which is same as last year, same quarter. So F&B offtake is pretty much intact. People are consuming and also spending on food and beverage within cinemas.
Gaurav, another question. When you're talking about the average ticket price, Q1 it was 235 rupees. That is what it came in as. So how did Q2 pan out over there? The spend per head in Q1 was, I believe, 134 rupees, and ad revenue came in a little over 93 crores in Q1. So where do all three of these metrics lie in Q2?
So our Q2 ATP was 257, almost 6.5% higher than Q1. Our average spending on F&B was 136 rupees, higher than last quarter. And ad revenue was also pretty strong. We did about 102 crores of ad revenue as against 93 crores, if I recollect right, in the quarter one that we did.
Right. Mr. Bijli, the other thing which has happened, and it's essentially re-releasing old hits, some of the classics, right? And that's, I think, worked very well for you. But that's for lean season, or is it going to be a strategy throughout? Will we see a lot of that in the third quarter as well? And what does it really do for margins, some of these re-releases?
Well, it just, not because I've been running cinemas for a long time, but it just shows the power of the big screen. I mean, these movies are available for literally for free or a fraction of a cost in people's comforts of their homes on various OTT platforms. And yet, they want to go out and see the magic of these movies on the big screen. It just shows that the format of watching films on the big screen is very much, at least in India, very much there. And, everyday movies are getting, have a potential for re-release. So therefore, the library is so large that I don't think it's a flash in the pan sort of a strategy. We will sustain it throughout. We had started with 115 rupees ticket price. Now we moved on to 151 rupees ticket price. We're also looking at some of the trends. Like, for example, horror films and comedy films are doing very well. So when we released Tumbad, the response was just phenomenal. Similarly, movies with music like Laila Majnu and Rockstar, they've done well. You can package these films, and the younger generation of today, they didn't see these movies on the big screen, whether it's Mr. Bachchan's festival or whether it is films that we have packaged under festivals like Kareena Kapoor's festival. So they also want to say, heard about these movies, and but have only an opportunity to watch it on the small screen. So when they hear about it coming on PVR Inox big screens, they're all coming out. So it's very much here to stay. 6% of our occupancies, if I'm correct, Gaurav, came from the second quarter. And even September itself, I think about 13% contribution is from re-releases. So, and plus, these are gathering dust, doing nothing for the producers as well. So therefore, even the film hire is attractive on this. And F&B spends continue to be the same when people come to watch these old movies as when they come to watch a new movie. So overall, it's a very good experiment for us.
They have to pay more for the popcorn than the ticket prices for these old releases, right?
No, more for the Sonal was saying more for the popcorn than for the
movie, the older movies, right?
Guys, for popcorn, what is our SPH head? 136. Even that pinches you.
Okay, let me ask you, and I think with some of the newer movies, you don't know. You'll only know in hindsight whether they'll work or not, right? You've said this before as well. Some of the biggest it's so happened it's not worked, and sometimes there have been sleeper hits, but with some of these re-releases, you're only getting to the market what has already worked. So you have that assurance, and as you said, it's there's a big library out there, so you can continue to do this. But in terms of ticket prices, these are priced at a so margins overall for a re-released movie would be what? I mean, if you can give us a sense.
Gaurav, because of the film hire, what would be the margin?
Film hire charges are much lower, as Mr. Bijli said, for re-releases as compared to the new films which are released. But in terms of average ticket price, of course, as compared to a new film, it's at discount. While I would not like to comment on specific numbers, but it's roughly about 30 to 35% lower than the new films ticket prices.
Okay. Gaurav, what is the plan with debt reduction? You do have a lot of monetization plans in place as well. You have a land bank of around 300 to 400 crore rupees. Can you tell us how does all of it come together, monetization and debt reduction?
I think we are keeping a very sharp eye on our leverage. If you look at our September results as compared to March, our net debt is down by about 114 crores. So we are, keeping a very close eye on our cost, especially the capex side. As far as monetization of some assets are concerned, we are working with the property consultants, and we have received some expression of interest, which we are evaluating. Obviously, we'll take a call if it makes economic sense to sell those properties, because in some of these locations there are existing operating cinemas. I would not like to get into details, but we'll keep you and the market posted on the progress on that front.
Mr. Bijli, could you give us an update as to how exactly has Street Junction scaled up? Last time you said that you're expecting around 2 stores to roll out, by the end of Q2, and by the end of FY25, what is your target as far as Street Junction is concerned?
You're talking about the food court.
The tie-up with Devyani, yes.
Yeah, yeah. Food courts. I think the first one will open mid-December.
Yeah.
And I think we're looking at about 4 to 6 opening maybe this financial year, and then going up to about 8 to 10 next year. So I think it is so we're very excited about it, because of our partners. Devyani has got a tried and tested model in the F&B business, very successful. And secondly, this is the first experiment that we have done where the pre-ticketed F&B sales will get accrued. Because up till now, all the F&B sales are post-ticketed. You buy a ticket, you go inside, and then you buy. But I was very keen after COVID to experiment with pre-ticketed, F&B business revenue, and we'll be doing more and more things on this to mitigate our risk from, just having F&B when people are watching a movie, and not other than that.
Mr. Bijli, just one more question. Something we've discussed is, and this is not true this year, but over the last couple of years, is Bollywood kind of taking a bit of a backseat in the overall scheme of things. Regional movies coming up in a big way, but I think Bollywood also needs to fire with hits and big ones for your business to also start to fire, right? So
Absolutely.
Where are we in that cycle, in your opinion? Because stuff would be under production, it'll take time to come out, and then people will start working on newer ideas. Have people moved, and are we going to see this Bollywood coming out with things which work and which will continue, which will deliver big hits? What's your sense?
Yeah, whether one personally likes a movie or doesn't like a movie becomes a subjective issue. But as far as I'm concerned, Stree 2 has worked. There are so many films that came in the first half, which basically connected with the audiences. Now we got Singham coming. So there's a lot of commitment from the film fraternity, Bollywood as well as South and Hollywood now, to come back on the big screen, because they've realized that if they make a movie, the economic rationale of releasing the movie on the big screen is still very, very strong. 60% of your revenues in the overall monetization journey of the content that gets created still comes from the big screen. You can't do that if you go straight to OTT. So I think smaller movies like Munjia also, small film, did very well. There were so many sleeper hits, I'm unable to recall them just now, which were made for a very small budget, but they did many times over their budget. So that is a very big, even Bad News did exceedingly well. So this only is encouraging the Bollywood industry to make movies for the big screen. And obviously everybody wants their movies to connect with the audiences. And the lineup, which I'm seeing in the next quarter and the next year, financial year, is looking very, very strong. Aamir is making 2 films. Then Shah Rukh is coming with a movie. Ritik's film War 2 is coming. Ranbir, their movies are coming. Just now Baby John, Singham, Ajay Devgan, Vicky Kaushal, Rajkumar Rao has come, is emerged as, somebody who's come up with the biggest ever Hindi film. That is saying something. So his lineup is also there next year. So I think what people perceive to be advantage, according to me, is a disadvantage. According to me, is an advantage, because where in the world, in which market, you get so many films coming in, and every week the experience changes. So my menu changes every week. So I'm quite excited about that. We never stale. And because the quantity of films is so much that that something or the other, if it doesn't do well, there's another set of movies that will come, which will make up for movies that don't do well.
All right, you got a long pipeline, and you rattled off some of those names, big ones. So we look forward to those movies, and we look forward to our next conversation as well. Mr. Bijli, Gaurav, thank you very much for joining us here on CNBC-TV18. It is a pleasure having both of you here. Thank you very much. Markets, just to take a quick look, down 80 on the Nifty, 25,044. And as we were starting that conversation with PVR, there was a flash on oil prices, Sonal. Down another, I think, a couple of percent, I think 2% or so, on top of what we saw, which was about a 3% decline last night.
So it's around $74 a barrel that we are, and the demand forecast cut is something that is coming as a surprise as well suddenly, but of course that was expected after what's happening in China. Before we take a break, I wanted to ask you which is the movie that you are looking forward to. There's so many coming.
Now, now that Mr. Bijli has rattled, so I'm going to go and Google. There's
Singham 3 coming. I'm sure you would be.
Singham 3 I want to watch, and actually there's a movie called Wild Robots.
Okay. With you, I'll hear such stories only, or such names only, Prashant.
The last one got me really excited was not Interstellar, what was that? Oppenheimer.
Oh, okay, of course.
That, of course, ran for, I think, months, right? Almost 3-4 months or so.
Yes.
But yeah, I mean, hopefully more.
All right. Exciting times ahead for the industry as well. But thank you, Prashant, for joining in for this conversation. With that, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back to Midcap Radar. Well, we spoke about two companies, that actually had Brokerage is going ahead and initiating coverage on them. One of them was RK Forging. You also saw Time Technopast. Well, there was another initiating coverage note on JSW Infra today, and Nuvama was the one that actually has initiated coverage on this particular company. They have a buy rating on the stock. They've kept a target price which is quite steep at 390 rupees a share. They expect revenue, EBITDA as PAT CAGR, at 19%, 16% and 15% respectively over FY24 to FY27, and they have valued the stock at 25 times FY28 EV to EBITDA. What is it that they like about JSW Infra? Remember, the company is India's second largest private company, which has seen a 25% volume CAGR between FY19 to FY2024, and along with that, they believe that the company is poised to sustain the strong long-term growth on the back of very favorable macro tailwinds. They expect almost 4 times capacity growth over the next 25 years, and this they expect it to be supported by both organic as well as inorganic growth. Organic growth is largely coming from the JSW Group Cargo itself, especially JSW Steel, which has gone ahead and spoken about significant capex plans. Inorganic growth that the company has already announced. Remember, recently the company completed the acquisition of Navkar Corporation. The company has seen inorganic growth from ports as well as logistics segments. Now, what is Nuvama saying? Given JSW Steel's very strong capex plans, they believe that the group may continue to contribute close to 50 to 55% of the top line over the longer term. In terms of growth, they're expecting significant growth in FY28-29, almost 43% and 25% year-on-year growth on EBITDA level for FY28 and FY29, and they believe that the growth commissioning of a brownfield expansion at Jaigarh, Dharamtar and Goa, as well as the Chatardar port, is something that will aid capacity going forward. On the back of that, JSW Infra has cooled off a little bit, was much higher at the start of the session, but has cooled off the session today.
All right, that's JSW Infra. By the way, we have HDFC Life's Q2 numbers flashing for you at the bottom of the screen. The net profit is up 15%. That has come in at 433 crore rupees, compares with 377 crore rupees. This is on a YY basis. But for HDFC Life, we do need to understand some other numbers as well. We want to know the VNB margin, which is the value of new business margins. This time around, the number that we are working with on the CNBC-TV18 poll is 25.37%. It's expected to see some decline, but they are expected to expand on a quarter-on-quarter basis because the VNB growth is expected to be very strong. If we talk about the New business premium as well, it is expected to grow by 15% on a YY basis to come in at 8,167 crore rupees. Just watching out for that report and looking at the release as well. But so far we have the net profit number which looks good. It is up 15% on a YY basis. If we get the stock as well, the stock should just give a sense of, it has seen a small surge, but of course any internals are something which will give you a more sense. So just to run you through the poll again, the new business premium is expected to increase by 15%, annualized premium equivalent expected to increase by 24%, the value of new business expected to increase by 20%, and value of new business margin to see a sequential improvement, but it would be a YY decline. But I think these are the details that we have for now in HDFC Life. So
we'll wait and see, what Yash brings up because, I'm sure he's already opened up the P&L and he's looking at it. So AP numbers, the VNB margin, like you mentioned, that'll be key to track. Now, going forward, remember, our colleague Lata Venkatesh spoke exclusively to Agustin Carstens, the General Manager at Bank for International Settlements, to get his outlook on dollar as well as India's economic growth. Let's listen in to excerpts from that conversation.
I mean, at the end of the day, the dollar has developed the main avenues. At the end of the day, financial transactions depend on the credibility of the currency. And at the international level, there is no more credible and reliable currency than the US dollar. And my strong feeling or belief is that the dollar will prevail as the main payment, main currency in the international financial system. I think it's very refreshing to come to a country where you see very positive indices right and left. I mean, I think that you have followed a balanced process of development from a macro point of view. You have had a good fiscal policy from the point of view, yes, it's in deficit and so on and so forth, but it is moderated, but also the quality of expenditure is adequate. So just coming here, you see the development of infrastructure, and infrastructure definitely will support the economic growth. You have inflation under control. Financial intermediation is working well. And then you see also major efforts in different regions in the economy, trying to, from a structural point of view, make the Indian economy more productive, more efficient. And I think that is being reflected in rate growth. And in that way also you take advantage of the fact that you have a young population, a driving population, and at the end that materializes in terms of economic growth.